Hello, thanks for tuning in to Kalkine TV. I'm James Preston and this is The Hot Performers, a show where we take a look at stocks and sectors that could be heating up. In today's episode, we're taking a look at 3 ASX-listed blue chip shares with substantial returns that can be looked at by investors in December, beginning with CSL. CSL is engaged in the development, research, manufacturing and marketing of cell culture media, human plasma fractions and pharmaceutical and diagnostic products. The biotechnology company includes the CSL Behring business and the Seqirus business. The company is expected to perform on a decent note in the long term on account of strong demand for its immune globulins and lucrative research and development pipeline. The stock has given a year-to-date return of nearly 6%. In the past 1 year, the stock has risen by 1.4%. CSL recently released an announcement related to its Seqirus business. The US Food and Drug Administration has granted supplemental approval of a multi-dose vial formulation of Ordens. This is the first ever adjuvanted cell-based influenza vaccine designed to help protect individuals 6 months and older against influenza A, H5N1 in the event of a pandemic. FDA approval of the MDV presentation of Ordens marks an important milestone in Seqirus' pandemic preparedness efforts in partnership with Biomedical Advanced Research and Development Authority. Our next blue chip stock in focus is Goodman Group. Goodman focuses on business space, property and international, industrial, development and funds management. The real estate firm has grown at a robust rate in recent times on account of its strategy of developing high-quality industrial properties near large urban populations. Goodman Group's share price has increased nearly 29% since the start of 2021. It's also gained over 35% in the past 1 year. Goodman's share price last week hit a new all-time high for the third consecutive day. Global accounting and professional services firm BDO in Australia released the results of its 27th annual survey of Australian REITs, and it found Goodman Group to be the third best performing Australian REIT for the 2021 financial year. According to the report, Goodman Group places a focus on being innovative and agile within the typically stable REIT sector. Over the 21 financial year, they maintained a strong position to capitalise on growing e-commerce trends by having a portfolio occupancy of 98%. The industrial sector has a relatively high barrier to entry, and high occupancy rates combined with growing rental yields placed Goodman Group in good stead to take advantage of robust demand and also puts them in good stead moving forward. And just before we check out our final stock, let's go to a very short break on the Hot Performers. Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV. Welcome back to the Hot Performers on Kalkine TV. We're taking a look at 3 ASX-listed blue chip shares with substantial returns that can be assessed by investors in December. That includes CSL and Goodman Group, and our final stock to assess is Resmed. Resmed is a sleep treatment medical device manufacturing company. It produces products for improving the lives of sufferers of conditions such as sleep apnea. Sleep apnea is currently a largely undiagnosed ailment, and this gives Resmed a long runway for growth into the future. In the first quarter of the 2022 financial year, the company's revenue rose 20% over the prior corresponding period to $904 million. The stock has given a year-to-date return of over 34%, and in the past 1 year, the stock has risen by over 30%. With the company's first quarter results released late in October, Resmed went ex-dividend in the first week of November, and historically when a company reaches its ex-dividend day, its shares tend to fall in proportion to the dividend paid out. This is because investors tend to sell off the company's shares after securing the dividend. However, it appears investors believe that Resmed's share price is undervalued as shares shot up higher on the day of the dividend payment. So to sum it all up, blue chip stocks can provide low risk return options to investors, and as a result, including blue chip stocks in portfolios is considered to be a very wise move. Alright, well that's all for now. Stay tuned to Kalkine TV for the latest market updates, business news and exclusive interviews. I'm James Preston, signing off for now.